Joining us now is Graham Rapier, transportation reporter at Business Insider. Graham, thanks for joining us here today.
Thanks for having me.
I want to start with the category of the workers in product and engineering. You'd think for a high growth company, those are teams that you'd want to build up. What can we glean from the types of employees that were cut from Uber?
Well, so this, as you said, was product engineering. Before it was marketing. So they're still really big teams, and it's only a drop in the bucket compared to the 27,000 employees they have around the entire world. But it's still big cuts to really important teams and really high-paying jobs, too, as the company tries to cut costs.
So it's interesting because I know this news came out yesterday during market hours, and Uber, gained about 3 percentage points on this, I think, as Wall Street is happy about the company looking to cut costs, but then actually down fractionally today because of that California bill that does look like it could become legislation, and what that could potentially mean for a company like Uber. If you're an investor on Wall Street and you're looking at that news, I mean, that's not good, right?
No, it's not good at all. It could be a lot of costs. I think it was Barclays analysts estimated $290 million in California alone. So as other states look to California and try to model this legislation, things could get really bad for both companies.
Let's just lay out exactly what the legislation is, right? Basically, Uber and these other gig economy companies would have to reclassify their workers from contractors to actual employees. But I think a major turning point, obviously, for a company like Uber that has built a $55 billion company essentially on a massive contractor base.
Right, exactly. And so now they could be forced to pay everything from Medicare to a higher wage. These benefits, those are all going to add up really quickly. And for the companies, it could mean bankruptcy.
And Uber and Lyft have obviously fought against this bill or passages of bills like this, but they've argued that drivers want that flexibility. They want to be classified as contract workers. Dara Khosrowshahi, CEO of Uber, has even said the fact that our drivers consistently tell us that the reason why they value Uber is they value their freedom. Is there a disconnect between what drivers actually want and need versus what Uber and Lyft think or say drivers actually want and need?
Definitely, and it's important to keep in mind that 80% of drivers aren't driving full-time. Most of them do really value this flexibility. So under the law, it could mean that if you drive for Uber, you might only be allowed to drive for Uber. And I think if you take a ride in New York especially, they'll have both decals on the car. They're driving for Uber, they're driving for Lyft, they're driving for any other companies.
Uber also reportedly working on financing options for drivers as well, maybe as a way to get them to only choose Uber, for example. Do you think that will have any sway on the platforms that that drivers choose?
Yeah, anything they can do to convince a driver to say, hey, Uber is better than Lyft or Lyft is better than Uber, to keep them in that ecosystem is definitely going to be a plus.
When I look at Uber's stock price, 26% below its IPO price. Rank in order of most concerning to least concerning, right? The issues that do face investors right now.
The costs are definitely on people's minds. Like I said, it's a very small drop in the bucket. They have 27,000 employees, but these cutting costs is going to be very important, especially as the costs could go up with California. They said they want to wean us off coupons. For years, they got us hooked on these really cheap rides, but those have been heavily subsidized.
Right.
Now that investors want to profit, those are going to eat into it as well.
So should the consumer expect to pay a lot more money if this California bill does become legislation?
Definitely in California. Lyft CFO said at a city conference this week that it's just going to be a pass-through, so any increased costs are going to go straight to the riders.
So we've had this tension, this back and forth between providing drivers with good pay and benefits versus keeping the costs low for customers. Do you think we're ever going to reach an equilibrium, or will it take autonomous vehicles before Uber can truly offer customers the price point that they want and achieve profitability on the other end?
Autonomous vehicles are probably a long way away, but ride-hailing is clearly here to stay. People are so hooked on it. The number of rides is astounding, so it's just a matter of finding that balance between the price and what investors want.
Uber trips here in millions. It looks like 1.7 billion Uber trips in the second quarter of this year, and that is the same quarter that Uber lost, what was it, $5.4 billion in the quarter. For consumers, we've already seen prices, at least here in Manhattan, gaining since June. I'm just wondering how much more runway, right? 10%, 20%. What are you anticipating in terms of how the cost could increase?
That's a good question. I think 20% we shouldn't rule out, and maybe even higher. It'll really just depend on how many rides there are and how high they can push those fares and keep people still riding.
Oh, gosh.
So then how do maybe loyalty programs play into this, right? If they're relying maybe more on subscriptions per month and keeping costs down for those people, how do you think that's going to play out for the two companies as they're both testing out different concepts?
Both companies have said that they really want to compete on that product. So I think it'll come down to whichever company you like the most, whichever gives you the most rewards. You know, they might not offer you a coupon, but they can say, hey, you ride 20 times, maybe you'll get a free ride out of it. Anything to keep you in that ecosystem and keep you from going to the other.
All right, that's Graham Rapier, transportation reporter at Business Insider. Graham, thanks for your time today.
Thanks for having me.